Otsu here. Who else would it be? This is Observations with Otsu. This is August 13th, 2024. Hope you've had a good day, good week, good everything else besides the price action. We're going to take a look at the weekly structure. It's been a minute since I've done an Observations with Otsu. I think it's been almost a month. And so you may be unfamiliar with this. You may be new to the channel. If you are, you can like, subscribe. That's pretty much all I'm going to say about that. You can take a look at my Arune Pro stuff as well. That's how you can support me. I don't have sponsors. I don't want sponsors. So if you want to support the work that I do, you can do that directly. And so we can cut out the middleman. Because so many people have had sponsors and they end up being shady. Okay, like I don't want to give you a sponsor that I don't know what they're going to do 12 months later, right? So if you want to support me, you can. If not, that's fine too. I thank you for watching. So with Observations with Otsu, we take a look at the weekly perspective. I have a theme for each video as well to kind of coalesce with the price action. So I've got kind of a hybrid of two themes. First of all, we're going to take a look at weekly divergence structures because there's some that are divergent, and we'll kind of glance over that. Not necessarily glance, but take a look at that holistically. And then I want to talk about green candles because we've had a series of green candles over the past week or so, and they're not exactly bullish. So the theme of that is really that not all green candles are bullish candles, and we need to understand the difference. In order to understand the difference, we need to look at things from a market structure perspective. So in this video, we're going to talk about those. We're going to talk about Bitcoin, Ethereum, Solana on the weekly and daily time frames. We might cover some 2-week charts and even 1 month, just depends on the context. And so that being said, let's get started into the video. So for the theme of this video, I'm doing these a little bit differently. I tried to do a different structure for Observations with Otsu a couple months ago. Didn't work out, so I'm just going to go back to the basics. Everybody seems to know and love it. Get better engagement that way. So what I do with these videos now is we're going to have a topic of discussion. Try to get this around 5 minutes, and then we'll go into the analysis and try to do about 5 minutes each. So this should be about a 30-minute video overall. But we'll get to the theme of the video, and I actually have two themes. The first one we're going to talk about is why green candles are not always bullish. And so we're going to take a look at that first, and then we'll take a look at weekly divs because I think that that's more important. This is more of an analysis type of video because the structures are so complicated, and I think Bitcoin is a good example of this. We've had a rundown like so, which this is all working pretty good horizontally. I've mentioned this in several videos already, but this doesn't give us anything good with structure, right? Because if you look at this from this standpoint, like so, like this was respected until it wasn't, and then it just stopped being respected, right? And so we have a lot of levels like this that aren't really being respected. Here's your current somewhat respected level, but even then it caused an overthrow to the breaker. So there's a lot of structures here that are not being respected. Here's one as well. This one's being respected, and all the respected ones are really from the top side, not the bottom side. And this is not necessarily a bullish sign. This is actually more of a bearish sign. This is a bearish retest sign. And that goes into my first theme of this, why green candles are not always bullish. And we see this right here because this was a massive green candle. It's blue on mine, obviously, but this is meant to be a bullish candle, but that doesn't mean this is a bullish reaction. This is a bearish retest reaction. There's a lot of conflict around here because this is a deviation. This was a deviation. And if you know me for more than 30 days, you know that I really talk big about deviations. They're one of the biggest signs of a market structure flip. When we get a deviation, it's usually a big bullish sign. If it's on the downside, it's bearish if it's on the upside. Here's a bearish deviation, and this has been the top of the entire Bitcoin market cycle. And this was a deviation that led up almost to the highs here. Got the double top. So you can see why deviations are a big deal. Now, what I want you to understand as far as green candles is that this was a solid green candle, but this led straight into a bearish zone. And so that's, if your main takeaway is anything, understand that bullish days are not always bullish structure changes or trends, okay? And so take a look at this. This candle was 11%, almost 12%. Arguably one of the best days that we've had for Bitcoin this year. Maybe not the biggest day, but one of the biggest days. And everybody thought, hey, we're back. I saw this, very significantly on my feed. And I don't know if my feed really is the same anymore because cycles have changed, people have changed. You get a lot of people. I was just in a discussion, a little bit of a heated discussion actually, about a lot of stuff with Web3 and marketing, things like that. And like, it's like the entire industry has changed. And I don't think it's changed for the better. I think it's changed for the worse. And you wonder why this market cycle has been so trash. Okay. Because one of the things is we're trying to advance this industry by forgetting the people that have been here in the first place. And you wonder why things are not working. Okay. There's a massive disconnect, and that's probably its own video. But anyway, the point being, you get that same reaction with candles, right? So we had a very big bullish candle. A lot of people thought that we were back. I mean, it is what it is. I'm not saying that they're right or wrong. They could still be right here because we could come up to this zone. The point is we actually dropped down from the 68,000 marker, and that's just regionally. Generationally, we've been in a drop since 73,000, a slow bleed, if you will. And this is a painful bleed. A lot of people are pretty much done with this, and I pretty much am too. But you gotta be persistent. So, but the point is from July 29th, as you can see on the bottom, this was the top at 68,000. Okay, we did put a bullish candle in, a very massive candle, but we have not even made a new zone. This is not a reclaim of even the mid level, much less the top level. So you see, we're still lower than what we were before the drop down. So there's no reason to get super excited about a massive 11% candle. Okay, that is good. There are some problems with that, which we'll get into in the Bitcoin section of this video. But the main idea I want you to see is that we are still net negative from the past month, despite the fact that we've had the big bullish candle. That bullish candle is not enough to change momentum, is what I'm saying. You need to have this flip. Now, we did have a small flip here, but you can see that we've already lost the 200. We're trying to gain it back right now, but this isn't being respected. These type of moves are called breaker moves, and so usually they retest this zone, which we just did. So hopefully this is a bullish retest inside a bearish one, and hopefully that leads to a reclaim. That's what I'm looking at a reclaim of 62,500. But I really want to emphasize, until it doesn't, this is a bearish retest. Okay, we can go to Ethereum. We had kind of a similar situation here, but this did come up, and so hopefully that stays. We had a deviation here, which isn't good. I think Dogecoin is another example of this on the daily, because we had a bullish candle that same day, but you can look and see here that we haven't really held below the zone, or we haven't gotten above the zone. We're kind of creeping above the zone, but we're not doing much else. And so you can kind of look at this from this angle as well. This is your swing high order block. You get rid of this, and we may just be able to creep up above it, but we don't have anything substantial here. So with that being said, I this is a good thing if we come back above and this reclaims like completely above the zone. What I tend to do in these situations is have a fib block here, and so you can see how that rejects. A fib block is basically quantifying this zone very simplistically, and if it goes above the mid, that's a sign that it has gone above the entire block. You just don't know it. And I kind of hate drawing these because this is a sign of irregularity. You really want this to reclaim the entire block structure. The mid does suffice. It's a little higher risk, but it also potentially higher return. But it's also a sign that the structures are not super healthy. They're not unhealthy either, but they're like a pre-diabetic state. I hate to kind of use that term, but it's a sign that something could be happening, right? That's bad. Hasn't happened bad yet. Can be reversed, can be changed, and any market structure can be changed. But it's one of those it's good enough, but you want a full reclaim of the structure. Let's look at some other examples. I think WIF was another example. Yeah. So we had 3 bullish candles up right to the 200. We rejected, and now we're down below it. This is a long signal that we discussed in premium. Has not triggered, and one reason it didn't trigger because we were waiting for the 200 reclaim. And so that's another sign of three bullish candles that are not doing very well, or that have done well. They're still holding the zone, but again, is not a sign of bullish trend or momentum for that matter. Okay, and so until you get that trend or momentum, it remains a bearish retest. So I can give you one more example here is Pepe. And so we rejected from this zone as well. We do the fib here and go like so. So we did kind of claim a little bit, rejected the mid, of course. Now we're back down. Now we retested this zone here. And so again, another series of bearish or bullish candles that resulted in bearish retests instead. So how can we identify what would really be a bullish trend or a bullish momentum? So I shared with you the problem. How do we get out of the solution? Well, the first solution would be to reclaim the structure. Okay, market structure is very important because it shows you how healthy everything is. And so it'd be just like a framework to a building or a website, things like that. Like you need to have, for a building, you need to have a solid foundation. You need to have doors and windows and things like that, right? And so how you do that to get the building set up is you need to have a proper foundation, and then you start making doors and windows, right? So bad example, but that relates to trading because if you want a healthy trend or momentum, we at least need to get the structure intact for a bullish or trend or momentum to take place. The first way to do that is to get a reclaim on this because this is a very bad structure. I can't tell you how bad this is because you got like an order block here that isn't related to any of these. It's not on the same level. This order block isn't related to this level at all. And so you have a lot of complications. You can try to force like a channel, and that doesn't really work. I mean, you can kind of force maybe a wedge. That's potentially okay. But it isn't wrong per se, but you're really stretching it. And so if it works, I hope it does, but you're still got the bearish zone in here, everything like that. So what can you do? First thing is have a reclaim above the complete zone. You need to have some sort of structure, and that's how you do it. Reclaiming this at a minimum would be good at 974 because sorry, because this would actually help reclaim this zone as well. And so if you got a reclaim of both of these, this would certainly help. Now you're still below the trend, but at least you have something to work with. Okay, you have a sense of supply and demand. You have a sense of an upward price action that is holding an area. That's a very key thing, very easy, very key thing with that. And and also too, another way it would be looking for Aaron. So like we're in a bullish wedge right now, and so that's why we're getting some momentum. So if the bull line is at the bottom, which this is the blue line, blue and bull, same thing. So it is not trending. A bullish trend would be when it's up top like this, right? So this sign, while this is going down, is a sign that although the bulls are not trending, the bulls are bringing the bearish trend down as well. And so this is a good sign if you're a bull because you're not scoring any points per se, but at least you have a good defense right now to prevent the bears from doing their job. And so the goal is to try to cross above that zone. And so that's the thing. As far as Aaron goes, you want to have a basic level cross. We could get that here pretty soon. Also another quick one is the RSI. And so like RSI is actually more complicated than I think it gets credit for. A lot of people throw it off as being too easy or they use it for only a couple things. But the main thing with RSI that a lot of people don't understand is the 50 zone. This is a percentile. A 50%, if it goes above the 50%, it is a sign of bull strength. Okay, and so that is a momentum based thing. Aaron is a trend and momentum tool. RSI is a momentum tool. So those things can help you that are very easy to spot. I'm not saying that that's going to give you what you need, but those are some very basic signs to look for, right? And so that's how you can look for a trend and momentum. But right now, we don't have either one for the bull side. So as much as you want to be bullish, we don't necessarily have that to work with. So anyway, that's the green candle, bullish candle section. Let's go into the weekly. We'll kind of scan the weekly. All right, so I'm actually going to get into the analysis part of this video. For the extra theme for the weekly divergences, I just realized it might make more sense to put them at the end of the video. So I'm going to look at Bitcoin, Ethereum, Solana first, look at the weekly structures, and then I'll look at altcoins on the weekly structures. So hopefully that makes more sense to you. I apologize if that's out of context from what you wanted, but You can go ahead and check the end of the video. I will have timestamps for that. All right, so going on to Bitcoin, this is what we got. I'm going to clean up the charts a little bit. And so this is what we're working with. This is the 200 EMA that we have. I might turn on some other indicators later. What we see here, since we haven't had a video for a while, I'm going to give the big context. This is a big, order block zone. This really isn't a quantifiable order block because this would have been the structure that I'm looking at. We actually deviated below that, and then we crossed above the mid of the structure and then back below and deviated again. So it's very frustrating, right? We are up about 2% right now since I've recorded the video, so that's good. We'll take a look at that in just a second. But as far as that goes, this gives us the context. 2 weeks ago, we had the big drop down that everybody kind of freaked out about with the Japan. I'm gonna call it the Nikkei, but I don't know if that's the proper pronunciation. But with all those things, we dropped down, kind of came back up a little bit. I don't really know where that lands right now. Don't really care because I don't look at indexes from regular markets when I look at crypto markets. That's just how I operate. A lot of people strongly disagree with me on that. That's completely fine. I strongly disagree with them. We can still be friends. Completely fine. Now, that takes us to the last week's candle where we had a pretty big drop downs. And so we had the drop down here like so, and then we were pretty much down. And so at that point, a lot of people were freaking out. And that price point, towards the 3/4 of the structure was like minus 22. We ended up going like minus 28 overall, not including the top wick of that structure. And then we reclaimed it. And so one idea that I had on a X post was that if we reclaim that and we get bullish on the candle, that's a pretty good sign. Okay, and we got exactly that. So as far as the weekly structure is concerned, this doesn't look too bad. Now, it's not a good structure per se, but I like the fact that we did reclaim this and we claimed not only just above this gap, but inside this one. And so that's a good zone. Okay, so right now our local context is this. And it is what it is. We can, it doesn't give us a lot to work with, but at least that's the context that we're working with now. And so this was a good drop and reclaim. So that's the good news. Another thing is we have a very wide bullish consolidation here on the ARIN. We have a 92 versus a 14, so that's pretty good. That's almost like, 70? So that's not doing too bad on that regard. And so, or maybe was it 80, I guess. So I don't know, I can't do my quick math right now. But RSI is also holding above the 50, so that's pretty good. We got all the recipes on the weekly for a bullish trend. And so with the theme of the video I told you, we need to have proper market structure to reclaim any sort of bullish momentum. And now we're starting to get the bullish trend. Okay, the structure is not really there. It's very crooked, but at least we have something of substance working. Now, a lot of this does depend on the current candle. RSI and ARIN fluctuate. They do repaint as long as the candle is open. And so that can change. Both of them can do that. So once this closes the weekly, and if it closes like this with RSI above 50, with the ARIN still doing what it's doing, then that's a good sign. Okay, that's something that we can work with. Now, as far as price action structure, I'm going to get rid of this for a second. We have a few different things. So the first thing was I looked at this from a swing high order block perspective. I looked at this from a long time ago. It actually deviated twice, so this is no longer a respected line. That's why price action is a little frustrating. If you're a price action trader, you're going to be more frustrated than if you are a trend trader because of the disrespect of these structures. Now, it also depends. If you are a scalper, you're probably doing okay as a price action trader. But when somebody like me that does the 4 hour, 6 hour, yes, I do 6 hour, it's a little less profitable, and so that's why I've been trading less. I'm not a good scalper, and so currently haven't been a good swing trader either. But that's why I'm a hybrid trader, because if I can't do a price action trade, I can still do a trend trade. If I can't do a trend trade, I can still do price action. So that one doesn't work. So what about this as a whole? This is a swing high order block section. This doesn't really work well either because it deviated to the above and the below, and so it went up 3 times, went down twice, not really working out. So from a price action perspective, this is not doing us any good. I've also tried to look at this from a fib blocks perspective. This captures the 52 that I've been looking at. We got the retest, so that's good. And so this is probably the best outlook of the 3. Excuse me. However, It doesn't really give us anything to work with just yet, and we need to reclaim the structure at 60,000. I think 60,000 is going to be your bigger context. We currently have that. It's looking pretty good. It's going strong right now. And so we'll see how that kind of works out. Another thing that I do see is that we have three drives on this regard, and then we also are working with some sort of continuation. So this is basically the best structure that I can give you. This is a trend pattern structure, and so this is probably the best context that I can make out of the weekly. We have a reclaim looking at this from this structure, not this one. I consider this, and I've always considered this a deviation of this entire cycle. This was meant to be a deviation. This is not part of the structure. If we go to the 3 week, for example, you can see that this is a divergence. Okay, a bullish or a bearish divergence. When divergences occur, deviations also occur as well. This was another one. This is actually a divergence on the 2 week, I believe. Yes, and so this is where I longed, and so this is your structure. So this becomes a deviation. So this part below the blue was your deviation point. Okay, this was your deviation on the high side, deviation on the low side, and so that's why I'm working with them. Okay, and so I tend to use those terms together, but they are not the same. Divergences and deviations are not the same. They happen at the same time. You can have a deviation without having a divergence, but you can't have a divergence without a deviation. And so that's how that plays out. I know that's very confusing. They sound very similar, so I apologize. But that's kind of what I'm working with. So going back to the weekly, this is the best sense of it, is that this was a deviation and this is the core order block, okay? Because this is not only did you have this deviation, but these are not respecting too much of the structure either. Because if you look at this from a whole, you look at this like so, you just have a bunch of trendy nonsense. And so because this didn't respect from this order block, this one didn't respect this one is kind of an anomaly, and this one was the deviation. So none of that was really respected. This was the only one that actually is respectful, and not even that much, honestly. And so that's why I use it for a context. We're currently going up, and that's good. If we can close above this on the weekly, we have plenty of time, got 5 days, then that'll be good. Then I think the bullish trend and momentum can continue. So that's how I look at this on the weekly. So what about the daily? So the daily here is a little bit confusing as well. We have the 200. The 200 is not being well respected anymore. Had the deviation going up, and so this was your structure that I was looking at. And so this was a longable situation in my opinion. Had the double top, so you're kind of, not too good on that one. Let's see here. Trying to adjust this here. And so had the deviation to the downside here, push above, and now we're kind of holding that. Now the good news is we could look at this from a trend standpoint as well. Maybe. I think we can, yes. So I think this is actually more valid than I think I gave it credit for. You have the trend line. This is a trendy deviation, which doesn't happen very often, but this is looking good. So I think that gives us something to work with. We are also at a bullish wedge, which is good. RSI is almost at 50, which is improving. Do kind of have an Adam and Eve, structure here, a cup and handle, whichever you want to. It's not quite either one, to be honest with you, but it gives us that sort of not double bottom, but double movement down. The same structure, double bottoms, Adam and Eves, cup and handles. They're very similar in that regard. This is probably closer to a cup and handle, but doesn't quite fit the structure for one either. That's why I'm saying the market structures are very weird right now. They look like things, but they also don't look like things. It's like almost AI generated in a sense, because they're not behaving as they normally would. And this is the danger also, by the way, if I can just kind of rant for a few minutes. This is the danger of looking at indexes, in my opinion. The more the market matures, because when I first started, we didn't even have USDC. Okay, we had Tether and we had USD, and most of it was Tether, because it was not acceptable to trade with USD that much. Okay, I remember when Coinbase really focused on Litecoin and USD finally, and then USDC came around. So So I've been around for a little while with this. And I say that to say that the market was much more volatile back then, and this is like the trading is much. I want to say easy mode, but it's not easy either. It's more smooth. Like there's not as it's not as fun for sure. But the thing is like once when I should backtrack. When I started in 2017, nobody, and I mean nobody, talked about the stock market. Nobody talked about PPI, which happened today. Nobody talked about CPI, which is happening tomorrow. Nobody talked about FOMC. Nobody you know, didn't even talk about Jerome Powell. Some people didn't even know who he was. Okay? That was the norm. Okay? Now the norm is the opposite. Okay? I have not changed in that regard. I've always traded without those elements at play. I see the charts without those elements proficiently. Honest truth, I don't know how people correlate that. I don't. Because for me, I don't see a correlation, and I don't need to see one either because I can manage the charts without it. I've always done that, and but I have seen over time that the more that we focus on the indexes, the more we focus on all these other methods, Bitcoin has performed less. Okay, returns have been less every year on average versus previous cycles. Okay, I mean, it used to not be. It used to be a common thing to make a 10x. It really did. And you can talk to me all day about how WIF went up this and this coin did this and meme coins are doing really well. And they are doing well. I'm not discounting that. But I don't think you quite understand how easy it was to make so much money back then. Where you could just buy something, you didn't even have to tell anybody, and it would go up 10, 20, 30x, no problem. Okay? And so we still have that now to a much lesser extent. You get people crack down on a lot of these things. And I'm not saying some of that, um, I've tried my hardest to not do illegal things. So like I said, my point is that as things have quote unquote matured, things have gotten very mundane, very boring, very lack of returns, and so susceptible to news. Like, you guys are just so upset over news for no reason. Like, I wake up, I look at the charts, I don't even look at the news. Okay, if something, if I don't look for the news to try to find out why Bitcoin went up or why Bitcoin went down. Okay, and so a lot of you guys really do focus on that way too much. I'm not saying that you shouldn't look at news. That's not what I'm saying. But do not let news affect your trading behavior. Okay, and so it is what it is. I think, me personally, a person is better off by looking at less news, less noise, less things like that. Focus on your own personal belief system. I have a religious faith of my own. I focus more on that than I would do like what some politician's going to say or what the news is trying to tell me. With a biased news media that was historically making fun of you, making fun of people like me 7 years ago, calling me a criminal, calling me all these other things because I got in early. And the only reason they did that, literally, is because they wanted to buy your bags cheaper. And now you got people like BlackRock, and you got people, you got all these, what's it called, ETFs, things like that in the stock market. Like we essentially won. We essentially did, but not without the disrespect of being told I'm a criminal, being told by I had a mentor, a really good mentor, and I still consider him a good friend, but he told me to sell all my crypto because I was like insane, basically. And I proved them wrong, and I can guarantee you they probably have a stack of Bitcoin right now. Okay, and so that goes to show that I could have easily been wrong, but I wasn't, and I wasn't because I just had that feeling to keep working with this. Okay, and so you've got anyway. I need to backtrack because my point is you have been told, like, maybe not you, but people have been told for years that Bitcoin's only for criminals, crypto's only for criminals. Like, you just saw one of the administrations, like the current administration in office, reversing their stance on crypto because they tried to win people over only to donate to their campaign, right? now they've just reversed their stance, or they're looking to reverse their stance. And they didn't give a reason, but I can guarantee you the reason is they're not getting the support from crypto people as they wanted to get. And look, you vote however you want to. That's not what I'm saying here. What I am saying is it's clear to me that the only reason those people that called you criminals no longer call you criminals is because they just want your vote. They don't care about you. They want your vote, okay? And as soon as you give them their vote and they get in, there's nothing that could prevent them from going back to where they were, to calling you a criminal, to putting you on record for this, that, this, that. Okay, and most of us are just citizens, or just whoever, wherever we're at in the world. Most of us are just people wanting to enjoy our lives. Okay, most of us are not doing anything illegal. A lot of us have families. A lot of us are just trying to live. Okay, and that's the thing. Okay, and I'm not trying to orange pill anybody, but that's kind of what that leads to with Bitcoin. Is the whole thing is you open your eyes more about how the financial system and the media has been, trying to corrupt your viewpoint. And so, anyway, I digress. I'm actually at the end of the Bitcoin section, so we will now go to Ethereum. I will stop ranting, and then we'll continue with the analysis. All right, going on to Ethereum. Let's kind of clean this up a little bit, and we'll start from here. So, similar situation with Bitcoin. You had the complex market structure going into the current price action. Had a drop down about 2 weeks ago. A little more preemptive versus Bitcoin, where most of the move was, this bigger one right here. But going on here, we had a bearish candle instead. It actually reclaimed pretty significantly, so that's a good thing. We stopped roughly at the 200. That's one reason why I focus on the 200, because sometimes, most of the time actually, it is respected into some capacity, right? But we still ended up bearish, and so that's kind of what we're working with. Another complex market structure here, almost kind of an head and shoulders type pattern. I don't like head and shoulders, but that's the best way to familiarize yourself with that. We can kind of look at this from a fib point perspective, but doesn't give us any respect either with this. So it's very all over the place, and again, doesn't give us much to work with. I mean, we can try to quantify it, but at some point, you're just trying to create patterns to make yourself feel good. This does kind of work, but also doesn't really in its context. So you can't really do much with it. That's why I said these market structures are really weird, and that green candles aren't necessarily a sign of bullish trend or momentum. So with that, we do have an order block section here that's probably sufficient for current current price action. You probably could adjust this for this zone here, and that would work pretty decent. Actually, this actually works pretty decent because you had the overthrow with this. You had the consolidation breakout, markdown retest. So with the markdown retest, now this is looking pretty good. There is a daily divergence, so we can look at that as well. For Aaron, wide bullish consolidation, looking pretty good. Not as wide as Bitcoin, but still doing pretty decent. Should give us some sort of trend opportunity for the bulls. No luck on RSI, however, so that is a sign that we are kind of lagging in regards to Bitcoin. We can look at this with the daily perspective in mind. And so this is your zone that you're working with. Here's your swing low order block area. And so we had the push up here. We had the daily bullish divergence with the wedge. So that is one reason why we had the push up. And so we're looking for this zone. A lot of, we've already talked about trading this in premium, but one of the trades was a long to 2,900 to 3,000. And so we are almost there. We have a little bit of ways to go, but we're looking to push above that zone. We are consolidating, so that's good. We should get somewhere between right at 2,900, I think, and we should get that by today. So we'll see how that goes. Other than that, not really much too else going on. The daily is a little bit messy. The weekly still, doesn't look too bad, but we need to get above this zone. I mean, we can go up to 3,000 even. We could go up to just under 3,000 and not hold, and we could reject and go lower. I hope that we don't. I hope that we reclaim this instead, but that's what I'm looking at. Don't get too excited about a few bullish candles when we just drop like 20%, okay? Because the fact of the matter is, from the end of July to the bottom, we went down 29%, and we're still down about 18%. So don't get too excited, because we still need to reclaim market structures. The weekly does look good, however, and so that is doing good. Let's go ahead and go to Solana here. So with Solana on the weekly, just kind of cover this together, is that we have this zone, big continuation pattern. Again, this is hard to quantify with this level. I mean, you don't always have, to be fair, you don't always have to try to make something out of it. Sometimes there isn't. But it's really odd that we don't have a lot to work with on almost any time frames, any structures, or anything like that. So this didn't really work out really well. I mean, there's really nothing. You could even try to, I mean, try to go here. There's not much. So again, you're working with much less, to work with. We on the Aaron side, we have a very high bearish cross. This is the highest that you can actually get without going to 100, and so this could be why we're a little bit weak. I mean, this is a bearish sign. This is a very bearish sign, actually. We're a little bit weak right now. We're still holding the zone, which I'll redraw it in a minute. We are holding the RSI, and so that is good. We do, again, this is very similar to Bitcoin, that we did have a continuation pattern, so that's pretty good. And so sometimes, and actually most of the time to be fair, when we have a consolidation like this, we get the run up. So we have another one here. If we can hold this for about 2 more weeks, this should be a bullish sign instead, okay? And so this bullish consolidation would actually be a prominent factor. So we'll see where that goes. I said a lot of back and forth, but basically the thing is, if we can hold this for 1 more week, I think the bulls are back. That's kind of what I'm saying. So we'll see how that goes. These lower bands where they're kind of tight here, that's a sign of the trend's trying to really fight for the macro trend, okay? And so if the bulls can get that, I think that's good. They actually did have it, and then we rejected. We rejected because the market rejected, okay? This wasn't necessarily a Solana-oriented thing, but this did happen to be a thing. So, long story short, could be a good sign. We just got to wait a couple weeks to see. And that, unfortunately, might take 180 for a price tag to do that. And so that's where the daily structures come in. A little bit messy of a structure, but this is the cleanest of the structures, however. And one reason we can look at this is from this zone. And so we had a retest here, kind of holding this area. Not precise, but at least it's the better of the three. That's a sign that the markets are just really weird if this is the best structure that we have. And this is not getting rid of for some reason. So anyway, had the consolidation, mark up, mark down. And so we actually retested this. Not well respected, like I said, but we did hold the 200. So maybe this is a sign that we're going up. I've mentioned in several videos that I think high time frame Solana is probably your best bet. I think all three of these right now, high time frame is going to be your best bet. So we'll see. We're up about 3% right now for Bitcoin, looking pretty decent. We'll see where this goes. And so, all right, that's Solana and Ethereum. I'll put them together today. Let's take a look at some weekly divergences, explain what I mean by that, and then we can end the video. All right, so what I'm going to do is I'm just going to kind of scan the markets as I talk. I think that's probably the best way to look at it, give you some examples. But I also want to, and I put this at the end part, also because there's a little consolation, right? The markets are going down. Green candles aren't necessarily bullish candles, but there is a sense in which some of these candles and structures actually do look good, and things tend to look the best when they look the worst sometimes. And I think Bitcoin is a good example of this. I'll kind of show you right here. Like, this is what we were looking at, about 2 years ago almost. And so this looked pretty bad, right? You had the drop down here. You had a bearish retest, almost exactly what I've been referring to in this very same video, right? And I told you that sometimes green candles are not bullish candles, which is what we have here. We got a few of these right here. So this looks pretty bad. I completely understood why people were kind of knocking on my idea to long this, okay? Now the problem is some of these in current price action do not have divergences. The ones that I showed you don't have divergences except for Ethereum, which I did point out in the Ethereum section. Now this does have a divergence here on the 2-week chart. I think it had it on the other time frames as well, and I think it was relative to here was what I was looking at. It had the drop down, and we know the history involved in this now is that we actually went up significantly, and that was the best time to long, right? And so it's almost like I wish I could go back and buy more, right? Like even me, I bought a pretty significant portion, and I pretty much like wish I would have put everything on there. And so that's kind of what I'm talking about. Some of these structures on the drop down, like are not divergent. Like Solana, for example, bad example, but you see this one was a divergent, right? And so that's where like the divergences matter to me, because that's where it changes. It instead of it becoming a bearish retest, it becomes an opportunity to flip the structure entirely. It becomes a deviation at that point, right? So I talked about with that. So that's why I mentioned those kind of things. And so I can kind of look here like I talk, but this is not divergent necessarily. So this is a drop down. This is a bearish retest. You have a bullish week to this so far, but this is not a divergence. And so that's why that matters. Okay, BNB does not have one as well. But Dogecoin does, and so that's kind of the key thing right here, is that we have a divergence in play, and so the divergence is active when the two candles are here. In this case, they're both bearish candles. They should be for a bull div. They're active, but they're not confirmed. When they are confirmed, you'll get a bullish candle right after that. Okay, and so you can long on an active bull divergence. Okay, I am a fan of that. That is high risk. I'll just let you know, it is high risk. I don't do it all the time, but I do it when the conditions are appropriate. The way you want to confirm it is to wait for a bullish candle first. That's You're not going to get as high of an R and R, but you're not going to be susceptible to risk, because as much risk, I should say, because you'll get that confirmation. So that's where that is active. On FTM, we do not. And I'll just kind of scan some of these really quick and see. Aave does not as well. I don't think Aave is a bad coin per se. I think this structure is looking pretty good, but not sufficient for the subject right now. And so we can take a look at some more here. Matic. Nothing too much else just yet. So Filecoin is another example of this. Now I don't know the performance on Filecoin per se, but you have a triple touchdown almost. Like this is almost a triple touch, not quite, but you are getting a divergence here right at the mid structure. So I think that that's pretty important. I'm not saying any of these are going to go up, by the way. I'm just saying look at the differences between divergences and regular patterns on here, because some of the weekly structures look terrible and some of them look good if you include the divergence. So don't neglect the divergent ones because some of your other ones look bad, right? And so that's kind of my approach to that. And let's kind of scroll down here and look at some of these more recent ones that I've added. And I guess I'll start with like Sui. Sui was a divergence here. This is one that we looked at in premium, and we had the reclaim. This is a great example. I know it's got a token unlock, but you had the channel, and you had a divergence while the channel was active. Clear cut sign that was going to go up. It went up. I talked about it in premium right around here. Got the break above the zone. Looking really, really good on that, honestly. And we can look at some more. I think Say was another one that we looked at, was a divergence. Bonk is not, and that's very frustrating. Let's see here. Let's go to, you can just kind of scroll down the list, but you get the idea, right, at that point. And so you want to look for weekly structures with divergences. This one's a double bottom, a little bit different, not quite divergence, but still would be on my radar. And so that's kind of how that works, right? So just keep an eye on stuff like that. You get the idea by now. So you get the idea of how the divergence work and why those are much more important when you're dealing with these type of structures. So anyway, that's the video. Let me know what you think. I'm happy to discuss things some more, get comments, things like that. I will post this on YouTube. I will also post this on X, and happy to respond. If you like this video, like, subscribe. If you like it even more, go ahead and check out Aaron Pro, because I have scripts. I have Nowhere Premium, which is my Nowhere group, my private group. And so all those are active and working well, and you can directly support me while I support you. So anyway, that's the video. Have a good day.